morning, everybody, and thanks for joining again. Today, we have a very special guest, Camilla Jeffs. She's a founder and CEO of Steady Stream Investments. Camilla is a general partner in over 1,500 multifamily units and 65-bed assisted living community. She has 20 years of experience investing in real estate. She holds an MBA and was known as an innovative HR leader for tech companies. Camilla is the host of the Quiet Wealth podcast. She's a mother of 5 amazing children, loves to play soccer and tennis, and raise farm animals. Welcome, Camilla. Super excited to have you with us today. So wanted to learn about your journey and also what inspired you to be a multifamily syndicator or a capital raiser. Wanted to learn about your first raise. A lot of questions. So I'm gonna give you the stage, get you started. This session is strictly for educational purposes and should not be considered as a legal, accounting, or investment advice. If you have any legal questions, please consult with your own attorney, financial advisor, and CPA. And this session is strictly for educational purposes only.
Well, thanks so much, Minky. It's so fun to be here and meet all of you. I love coming to these meetups and meeting new people and getting them, hoping to inspire you in your journey. So I'll tell you a little bit about my journey, where I came from and how I got to where I am. So way back when I got married young, my husband and we got married young. We were broke college students and trying to figure things out. And we were living in a garage apartment at the time. And in our garage apartment, it was, not luxury at all. Those fond moments, when you were living in a dive. And so the landlady came around to collect rent one day, and I just kind of asked her, I said, "How do you own properties? How does that even work?" And she said, "Oh, well, what you should do is you should buy a house and that has a basement apartment and rent that out." And I was like, no, you don't understand. We're living in your garage apartment. We have no money. And she said, "Well, that you can take advantage of like first time home buyer programs. There's all these things that you can do. That you can get into." And I was like, "Oh, okay, maybe." And that's exactly what we did. So we went from living in a garage apartment and we bought a 6-bedroom home that had a basement apartment in it. So 3 bedrooms in the basement, had a kitchen, and it even had a pool in the backyard. And we lived there for less than we lived at the nasty garage apartment. So that's what kind of really got me excited about real estate. And I was like, there's something to real estate. And so from there, our journey kind of took us through diving into real estate, trying to figure out all the things that we could. We really liked the book One House at a Time. It was like investing in real estate one house at a time or something like that. And so that's the method that we took. So we went and we bought a fixer-upper. And we moved into it because we could get the best financing, really low down payment, all of that, use as little money as possible. And then we'd live in a construction zone for a couple of years, fix it up, and then we'd move out and either rent it or sell it. And then we do it again. And we did that over and over and over and over again to acquire properties. So 15 years in, we had about 10 doors and we were DIYing a lot. Everything was DIY. And we had 5 children. So I birthed 5 kids in 8 years. So it was a lot that was going on in our lives. And I just got burnt out as a landlord. And I was like, this is so hard. I don't know if I want to do this anymore. So I decided to go back to school, got my MBA and joined the corporate world. And really enjoyed my corporate job. It was a great job. But I quickly realized that job was not going to make me a millionaire, that real estate was going to be the thing that was going to make me a millionaire. So then I pivoted and I, looked back at real estate and I was like, well, I don't want to do it the same way I did it before. I don't want to do all the DIY stuff. Let's see if we can do it a different way and figure out how to buy apartments. So I was looking at apartments and I was like, oh, apartments sounds awesome. But they cost millions of dollars. And I was still stuck in DIY mindset. And I'm like, we don't have millions of dollars. There's no way we can buy an apartment. But as I started educating and learning, I learned about syndication, I learned about group investing, and I learned that, oh, you actually do it with other people. It's not all on your own. And that's what catapulted me in. So the first thing I did was invest passively into syndication to, get my feet wet, to try it out, see how it worked. Fell in love with it, launched Steady Stream Investments, which is my passive investor education company, and decided I was going to be a capital raiser. Like that would be my role in the syndication. And I know we're going to dive into that, but that's kind of my background, kind of how I've got to where I am today. Oh, Binky, you're on mute.
I'm sorry, I put myself on mute due to my bad voice today. But that's awesome journey. I mean, you learned a lot being in the construction zone for a while, right?
Mhm.
Because kind of hands-on and gave you much more confidence. But capital raising, that was like totally different thing, right? Because you were doing on your own, the construction or flip or fix, whatever you're trying to achieve there. And all of a sudden, you thought maybe multifamily is going to be better for you. And using other people's money now, raising capital. So did you get scared with the first raise, or what was the sentiment there? Or how did you get started?
Oh yeah, 100% scared. Right. So when I was like looking at syndication and they say, "Oh, try and figure out what you can bring to the table. What's your superpower?" Right? So what can you bring to a partnership? And I was like, "Well, I kind of done it all. I've done acquisitions, I've done asset management, I've done underwriting and but I never raised capital." So that's funny that that's the one that I would choose. But because I'd done the other three. But but as I started like diving into all the four roles, I discovered I didn't really love acquisitions. I didn't like that, calling brokers. I didn't like the deal hunt. And then also underwriting. I mean, I was decent at it. Of course, I put in my time and did my underwritten over 100 properties so I could learn how it works and learn the numbers, and so I could do it. But I just didn't love it. It's not my favorite thing to be sitting behind a financial spreadsheet. Um, and of course, asset management, right? I could definitely do that. I had my own property management company with all of my own assets as well, too. Um, but then capital raising was interesting to me and I was scared, really scared of it at first, because I think I had the wrong mindset. Because my mindset was, oh, I need to ask people for their money. That's really scary to go out and be like, hey, can you give me $100,000? Like, that's a lot of money. But then as I kind of like started thinking about it more, I was like, as I invested passively myself, I was like, there are thousands of other burnt out landlords just like me out there that probably are looking for a different way to invest. And they either A, don't know about it, or B, don't understand it. And so maybe I could bridge that gap. So I could be the one that tells them about it and helps them understand it. And I have a teacher's heart. I got my bachelor's degree in education. I thought I was going to be a high school teacher, which I was for a little bit, but then, yeah, then I started having all these babies and I couldn't do it. and and so I had I have a teacher's heart, and I was like, this sounds like a good path for me. Now, another thing you need to know about me is that I'm an introvert, and so I'm not super comfortable, and I wasn't super comfortable at all on video or like I was okay getting up in front of groups. I've always had a knack for speaking, which is good, but like making videos of myself and like constantly talking about myself was like, I don't want to do that. And that's another mindset shift that I had to make, was that, oh, it's about me, right? And that's where I failed in the beginning. Because I'll tell you the story of my first raise. So I started like talking to investors. I hired a mentor first to, I joined a mentorship group that was specific to capital raising. I didn't want to join the mentorship groups that were like teach you everything and everything, because I knew I wanted to niche down and be good at this one thing. So I hired a mentor who was really good at this one thing and worked with them. And of course, they're, teaching me how to talk to investors and how to go out there and have these conversations. And, people I would talk to were interested. I'd be like, hey, would you be interested in joining a group investment? And like, oh yeah, tell me more, And so I tell them more, and then they'd be like, oh I'm interested. So I'm feeling good, right? I'm feeling good. Like, hey, I talked to like 50 people, maybe it's only 20, I don't know, 25-ish people, and they're all interested. That's exciting. So I thought, okay, I think I'm ready. And so I told my mentor I'm ready. And she connected me with a lead sponsor who was looking for more capital. And so I had the conversation with the lead sponsor, and and he said, the minimum to bring a capital, like to raise capital for me is 500,000. So you need to bring at least 500,000. It's like, okay, I think I can do that. And he said, okay, great. And I'll support you and help you in any way you need. And I told him I'm new, right? I said, set the expectation. I'm new, right? So I'm not sure how this will go. And he's like, no worries. I'm going to support you and help you in every way. And he was super supportive and helpful. So we launched the deal, and I sent it out to all my people who are interested, expecting them to be like, oh yeah, sign me up. And one person invested $50,000. So I negative 10x my goal. My goal was to raise 500,000. I negative 10x that. $50,000. It wasn't enough for me to come on as a general partner. It wasn't not another role that I could fulfill on it. So I just essentially gave that investor to the lead sponsor because that investor was excited about it and it was the right thing to do. And so then I started thinking about, well, what happened? At first I just hung my head and I'm like, wow, I suck at this. It's not gonna work out for me. I gotta find something different because I'm apparently really not good at this. And so I just kind of hung my head and almost quit. It got really close to quitting in that moment, thinking that, there's no way that little Camilla could do something like this, raise lots of money. But then after a couple of days, I started looking back at the whole process and trying to figure out what went wrong and where did I go wrong, because maybe there was a clue in there. Maybe there was something that I missed. And as I started kind of analyzing my process, I realized that the big miss for me was that I was coming at it from a place of desperation, right? I was coming at it from a place of ego, probably, that I wanted to do this to prove that I am intelligent and I can do these big things. I wasn't doing it in a mode of service to the investor. And once I switched that in my brain, so I physically changed my language, the way I was talking to investors. So instead of saying, hey, I need your money so we can go buy this property and then we'll give you money in return, my language switched to, I have an investment opportunity. I think it might be a good fit for you. Do you want to take a look at it? And when I came from that point of service of, hey, the investor needs me to be their connector, right? They need someone like me so they can invest in real estate because they don't have the time. They don't have the skills. They don't have the expertise. They don't want to be landlord. And investors I talked to today, like just yesterday, I talked to a new investor and she's like, yeah, I just don't want to be a landlord. And I'm like, I get you, right? I get you. That totally fine. You don't have to be a landlord. You can still invest in real estate, still get the tax benefits, the cash flow, the appreciation, all of that by joining a group investment. And then also by simplifying my language too. I mean, the word syndication is a word that I rarely say out loud because when I first heard it, I felt dumb when I heard it. So I was like, I have no idea what that means. And I even Googled it and I'm like, I still don't understand what this means. If you like the definition of it, like, okay. But when I realized it's group investing, you say group investing, anybody can understand that like right away. And so I changed my language. I changed my heart, basically. Like, this is not about me. This is about them. It's about serving them and helping them get into a good opportunity. Once I changed that, things turned around. So the next deal that I went to raise for, I raised 450,000. The deal after that was 575. And then they just keep climbing and climbing and climbing. And to date, I've raised over $12 million. But I could have stopped, right? And quit. It would have been really easy for me to quit and hang my head and be like, yep, I'm no good at this. My personality isn't the right one for this type of investing, but I didn't. And I focused on serving investors. So I think that's what really made the difference.
Wow, I love that. And you throw so many golden nuggets. This mindset is it's all about you. That's very, very important. So I'm going to ask you a question regarding that, first of all, because I think everybody, we kind of live in our own bubble or cocoon, you can call it. And sometimes we don't even have the awareness. We cannot see what we are doing right or wrong. So you were very, very aware about yourself, trying to figure out what went wrong or how should I tweak my language or my approach to reaching out to these investors. So I wanted to hear from you. How did you develop that, or how did you flip that switch, being more aware about yourself first, versus just like thinking, oh my God, they don't want to invest, they don't want to talk to me, it's just like, or victimizing yourself. Oh, nobody wants to invest with me. Maybe I should quit, find something else.
Mm-hmm. Yeah, you have to dig deep. I had to dig deep there because I think I approached it from fear too. Because when you're new in this, I have lots of experience investing in real estate, right? I mean, I have 15 years. I had 15 years before. Now I'm at 20 something. That makes me feel really old, but 20 something years of investing experience, right? So
Mhm.
I had that to lean on. I had partners to lean on, but I still was afraid that, the whole imposter syndrome, like they're going to see
Mhm.
right through me. They're going to know that I don't know what I'm talking about. And they're going to know that I haven't done this before, or that I'm green, or I'm new in this industry. And I had this like, way back when I was young, I was praised for, achievement, right? And so I have this achieving issue with myself that I always need to achieve. I have this incessive, just desire to achieve and for people to see that I'm achieving. And so that was the problem, right? Is because I had this thing inside of me that I had to really work out and realize that it's not about me. Like this whole investment experience is not about me. It's about the passive investor. It's about making sure they have a good experience. It's making sure they are the right fit for the deals. It's making sure I understand them and where they are. And so that was really key to my success. And so if any of you are like hoping to raise capital or get investors on board, just realize like, if you get on a call with an investor and the first thing you do is launch into who you are and what you do and how, your background, you're sending the wrong message. So the first thing you do on that call is you launch into the investor and you find out information about them. You have them talk first. And that's been key, because then they feel heard and seen, and they know that you're there to serve them, not the other way around.
So you said something very key over here. You said when you talk to the investors, find out who they are, have them talk first. So I'm going to ask you here, can you share with us, how do you start the conversation with a brand new investor? If you can take us through that journey.
Mm-hmm. Yeah. So my first question is to them is always, what's your experience been investing, either in real estate or, it just in general? And so then they'll go into what they've done, what they, and some of them be like, well, I don't have much experience. A lot of my investors are brand new to this type of investing. And that's on purpose, because that's the type of person I'm trying to help. I'm trying to help the first timer, right? They're help them get their first time. And so that means a little more hand holding and a lot more education and more patience on my part, but I'm okay with that, because I want people to know what this is. And so we talk about their experience first. So I want to understand their experience, and then really listen to them, right? Because at some point an investor would be like, yeah, well, and I bought this property when I was living in California, and since then, my wife had a couple of kids, and now we've moved to Arizona and whatever. And then my next question is, oh, how many kids do you have? Right? And how old are they? Oh, that's so cool, right? And you just get connections with them, and so you listen to them, and then you follow up questions. My second formal question is, okay, tell me about your goals in investing. Like, what are you hoping to achieve?
Mhm.
Because what I want to do is I want to make sure that the investments that I provide help them achieve their goals, right? If someone's looking to double their money in a year, I don't have the investment for them, right? This is not for you. But if they're looking for cash flow, they want a lot of cash flow. Well, then we're going to talk about, okay, how much cash flow are you hoping to get out of an investment? And if they want like 10% plus, and then I'll steer them towards my debt fund and say, okay, you could invest in my debt fund because that does provide a 10% cash flow return. If they want appreciation, like they don't need cash flow, maybe they're good with that, they just want appreciation, then I'll steer them towards an investment that is pretty low cash flow but much higher appreciation, like a new construction deal, right? And so you have to understand where they want to go and what they want to do. And those two questions are kind of my golden questions that I ask every single person I talk to, that's interested in investing with me, because it just lays the background and lays the foundation for the future. So you understand their background, you understand where they want to go, and now you know if you can help them or you can't help them.
So you're building the relationship more in the first meeting, not necessarily it's like a transactional call. I really like that approach actually, because I tell everybody that I'm in the relationship building business. Money is the byproduct of that, because whosoever wants to invest with you, they have to trust you. They need to know you, who you are. And the other thing that you mentioned is, you ask them personal questions, the personal level, connecting with them at that level. The other thing that was in my mind earlier was, everybody talks about vetting the sponsor, like they're trying to vet you, checking your track record on all that, being a sponsor or the capital raiser. How important is it for you is to vet the investor as well? Because investor needs to be vetted. And a lot of times we forget that. We just feel like, oh, we need money, whosoever comes our way, okay, let's bring him in into the deal. But not necessarily that's the right approach, if you can talk about that.
Yeah, yeah. I mean, well, one thing I want to say about, vetting the sponsor. So I think one of the things we feel like we need to do is we need to tell the person right away all of our experience so that they can like view us as experienced. But I don't do that anymore. I don't do that at all. I let them ask the question. If they want to ask that question and say, "Oh, how long have you been doing real estate?" Then I will tell them, right? I don't just like launch right into, and this is all my experience, and here's all the deals. I own 1,500 doors. I rarely say that. In fact, I get uncomfortable when Vinky says it on your meetup, like, oh, Camilla has 1,500 doors. I'm like, oh, okay. It's like, so to me, that metric doesn't mean nearly as much as like what you're talking about is the relationship that I have with the person, right? And do we trust each other? So now let's talk about when to say no. When would you ever say no to money? And I thought that was crazy at first. I'm like, why would you ever say no to someone?
That's my
But
favorite
I've
question, by the way. I ask everybody who's ever come to my podcast, when do you say no to money?
when do you say no? Well, so I say no to people who don't. If it's their last $50,000, if they're scraping it together to try to invest in your deal, no matter how excited they are or how much they really want to get going and investing, I would say no to that, because an investor who's putting everything they got into one deal, that's not a savvy investment strategy, right? You want to be diversified, you want to be comfortable with your investments, and there's risk involved. And so someone who can't handle the risk should not be investing in your deals. And so you have to really understand what where they are and where they come from. And again, in these calls that I talk to investors, I'll ask these questions. I'll ask, are they accredited? I'll ask them how much they're looking to invest this year. That's another key one. So write that down, right? Don't just say, how much do you want to invest? Ask, how much would you like to invest over the course of the next year? It's a more comfortable question for investors, because then you're not just saying, how much money do you have, right? Over the course of the year. And then they can be like, well, and almost every investor answers that question. Nobody feels uncomfortable when I ask them that question. But so you want to say no if someone just simply doesn't have enough money, right? And they can't, and they can't afford to lose that money. Because the reality is there's going to be a deal at some point where there's going to be money lost. And so they need to be able to weather that. The other reason I would say no is if the investor is highly skeptical, is not basically they're not they don't believe in the product. And so I would say not yet, right? I would say to them, sounds like you need some more information. Great. Take your time to understand this type of investing. I'll keep sending you more educational content so you can really understand the investing and go through it, because you don't want a super anxious investor on your hands, because then when you have, every time you send out an update, I mean, if you're one day late, they're going to be emailing you and be like, where's this and what's going on? And they get really, really concerned. And so I would say no to those people as well.
Thank you. So you said educational material. So when you bring somebody on board, obviously you have a CRM, you add them to your CRM database. So where do you start? What kind of educational material you start sending them day one? Because not necessarily they understand the lingo. You already mentioned that the language is very important. You got to be really, really simple. People don't even understand what syndication is. Because I remember when I came to the syndication, I was thinking syndication is just like a big buzzword for the corporate world. Because remember how we have the foreign syndications and all that we read in the political science or whatever when we were in college school. And even we used to send the delegates or the syndications to the foreign countries. To my experience, that was the understanding of syndication was not necessarily pooling the funds and bringing the investors together. So this is kind of a foreign language for a lot of investors when we talk the real estate language. So keep it simple is very important. So, but where would you start? Or what resource will start sharing from the very beginning so they slowly catch up and they say, okay, I understand the process now, let me try it out.
Yeah. So I've created a passive investor onboarding program as, it's as part of mine. So then as soon as they get on a call with me, well, even prior to getting on a call with me, they should be getting educated, right? So a lot of people will come into my system through like a lead magnet I have. So on my website, I have a course called Passive Investing Made Easy. And you guys can go grab that and take a look at it, and feel free to like copy it and, make it your own or whatever, but it's on steadystreaminvestments.com. It's just right there on the front page. So that is it just teaches them the basics of it. Then they get on a call with me. And then after the call, I send them through my passive investor onboarding program, it's just an automation email, a series of emails that goes out to them, again, educating them on here's all the terms that you need to know. Here's how to vet a sponsor. Here's how we look at markets. Here's how to understand the deal, and it walks them through all of that. So there's, I've built a pretty good system to really educate investors. And then I'm okay waiting, right? Sometimes investors come in, like I said, I work with first timers. So first timers don't jump in right away. They need time to let the concept simmer and to feel comfortable with it, and to talk to their spouse and make sure their spouse is okay with it, and all of that. And so sometimes people come into my system and they don't invest with me for over a year, and that's fine, right? I'm okay with that, and I just continue to educate them. So I'll do more things, like do webinars for them. I just held a webinar a couple weeks ago about self-directed IRAs and how that works, how they can transfer money there and invest in real estate with their self-directed IRA. And just putting out as much educational content as I can via email really helps them.
Right. And earlier you mentioned, when you talk to the investor, you listen carefully, you wanted to hear their points, or you wanted to hear about what their strategy is, the wealth building strategy. They want everything upfront, like in the dividends, or they wanted to wait and they get the appreciation. And accordingly, you direct them or route them to either new development deal or the value add deal or the retail deal. So does that mean that you have all these different deals under your belt, or do you work with different operators? How does that work?
Yeah, so my model is one where so since I'm not the operator, right? I'm not the acquisition specialist. I work with multiple teams in multiple markets and multiple asset classes. And I do that on purpose because I want my investors to have kind of a one-stop shop to invest in different opportunities so they can be more diversified. So I've been, through my networking and partnering and stuff, that I've identified, key lead sponsors that I like to support in these different markets and with different asset classes.
Do you have a specific process to vet these sponsors? Because you are vetting it as a partner versus just like investing with them. So what is your process like there?
Yeah. So my process there starts with networking, right? And so it starts with going to these meetups and getting to know the people in the industry, and then asking around like who knows who and who's a good operator or whatever. Then I initiate conversations, and so we start our conversation. One of my rules of thumb is that I don't want to invest with someone until I've known them for at least 6 months to a year and have followed their journey. So from the point we have our first conversation, I tell them right up front, and it's because often I'll get called, and you probably do too, Vinky, like, hey, I need some capital for this deal that I'm raising on. We need another million and we need to do it right now, right? And so I'll get called, and they're people I don't know. Never met, right? Maybe they're recommended by someone I do know. That's fine. That's great. I prefer that. But I'm also not going to invest with you right away because I need to understand who you are, how you run your deals, and your style. And so the first thing I do is I let them know up front, I'm not going to partner with you for 6 months to a year because I want to follow your journey. I want to understand how you communicate to investors. So please add me to one of your updates, right? So a current deal that you have going on, please add me to your investor updates. I want to see what you're doing. That way I can get some kind of, a little bit of insider knowledge on how they're communicating, how they're running their asset, how things are going, and then have multiple conversations with that person over the course of the next 6 months to a year. I also do background checks on my lead sponsors to just for safety. and and then and then I ask around, right? And I talk to other people and say, have you worked with them before? What's been your experience, etc. So that's how I go about vetting lead sponsors. And I ask them, I mean, there's specific questions I ask them too. Like I really want to understand their track record. I want to understand their tenure in real estate. And I always ask, tell me about a time you lost money in real estate. And if they say, oh, I haven't, then I'm like, well, you haven't been around long enough. I'm not going to invest with you because, if you haven't, then you will. And it's just a matter of when. And so there's a lot of, specific questions that I will ask too.
That's good. It's good to have a question, but I'm going to ask you one key question here that you mentioned you ask around beside your due diligence. So people have their own perceptions. Everybody is good or bad. So how do you take that into account? Because somebody might say totally negative about some sponsor, and somebody says, oh, I just love this person. This is the only person that I will ever work for. So do you listen to all those things, or just, or how do you figure out for yourself, what is right for you? Because there's a lot of noise in the industry, what I'm saying? And then a lot of people get caught up with that. So it's kind of analysis paralysis kind of syndrome people get. So if you can share your experience there.
Yeah. So, I mean, there's been, I had an experience where a certain lawyer that I wanted to use, somebody said they were awesome and somebody was like, oh, I wouldn't use them, and it did cause me to take a step back and be like, okay, why am I getting mixed reviews? And and your first initial reaction is to drop them because somebody said something negative about them. But then I was like, let me think critically through this, and let me like formulate my own opinion, because I just want to understand. I need to understand the reasons why they say that they're awesome and the reasons why they say that they're not good. you know and so that's what I need to understand. So I would dig deeper into those opinions from others. But then also I would, just continue having conversations with the lead sponsor, and watch their actions, right? So, I mean, one in particular I can think of that, you know, she posts um on Facebook all the time, and amazing value, amazing content, right? And I have invested with her. She's one of my partners in the Texas market, and just highly respect her in how she runs her operations and what she does. And so even if someone said something negative about her, I'd be like, oh yeah, I wouldn't invest with her. I'd be like, there's enough evidence for me here that shows that she knows what she's doing, and it might just be kind of a one-off, right? Because, I mean, let's be honest, I have investors who are mad at me because of something that happened in the deal. Like, there's a deal we have right now that's struggling, and investors are upset, right? And so the investors could easily be like, well, this deal is struggling, so I'm never investing with Camilla again because she chose a struggling deal, right? So yeah, there, you have to take everything what other people say with a grain of salt.
That's true. And the thing is, even something goes wrong, it's just like your approach, how you handle that. Because
Mhm.
it's a 5 to 7 year investment, like say 3 to 5 year or 5 to 7 year investment, different time scenario. So during that period, if something goes, it could be ups and downs, if something could go wrong. But as long as you pick back up and get back on track and the end result is right, it should be okay. And that's the kind of message I think we should be delivering, regardless
Yeah.
what people say, and then see somebody's track record. Were they able to pick it up, or did they drop the ball completely? All those kind of things matter, deciding all those factors. Camilla, oh my God, I love all the golden nuggets that you shared with us. I'm going to open it up for everybody. I've been asking all the questions. Please go ahead and ask questions to Camilla, how you wanted to start on your first raise, any burning question that you have. This is your time. I'm going to open it up. You can raise your hand or unmute yourself. I'll bring you to the stage and you can ask a question.
There is a question in the chat I can answer. It says,
Let me
how
see.
did you go
Go ahead.
about finding your investors? So, of course, with investors, first thing you start with is with the people right? Who do you already know? And when I have with my coaching students, I will talk to them about this too, and we'll work on it together. But what I do is I help them craft a initial email that says, hey, I I know you, you know me, and I'm excited for this new investment opportunity that I'm doing. I'm working on group investing, and I'm excited to have you, offer this as an opportunity. Would you be interested in joining me in a group investment? And so that we send that out, and that's how you do that. Then after you get your people who are, say, yes, I'm interested, you add them to your email list and you start educating them. And then how do you find new investors? Well, there's so many ways to find new investors. I'm just gonna be really simple with you and just say just need to have new conversations every single week, right? You need to have a method where you have a conversation with somebody new every single week. And if you just do that, uh you don't have to worry about like all these weird methods to do it. You'll be okay. And the cool thing about raising money for deals is that it's a snowball effect. There's you start off small and then it just grows and grows and grows if you care for your investors and you take care of them and you get to find good deals for them. And then they bring their friends, and it becomes, being able to raise money gets easier over time.
Thanks. Rashmi, you're on.
Yes, thanks, Camilla. Fantastic sessions. As an introvert myself, I've found everything and paranoid of capital raising. This has been really inspiring. Question for you. Have you invested in a deal that went bust in your history when investors' money has gone bust, and have you handled that?
Yeah. So I mentioned I have a deal right now that is struggling, right? So we're actually going through a capital call, which is not where I ever wanted to be. And so it's interesting how we are, navigating it and going through. But I think the most important thing when you're going through a challenging time is transparency and openness and honesty, right? Because there's two reasons that we are in a capital call situation. One is, of course, the economy, because it was a bridge debt, and there's a lot of multifamily properties that were bought on bridge loans last year that are going to struggle this year, and I'm in one of them, and so the mortgage payment is triple what it was before. So we are bleeding cash, and we're negative cash flowing. The second problem was the property management choice. So the lead sponsor chose the property manager was a good property manager, but wasn't able to scale to the level of the new portfolio. So the lead sponsor, picked up a lot of properties in 2021, 2022 time frame. Property manager couldn't scale, and therefore things went really bad and slow to fire, right? So remember, you got to be slow to hire, but fast to fire. And that didn't happen. And so now we are transitioning property management companies, and the occupancy is dipped. So it's affecting our NOI, and again, negative cash flowing. And so there's some things that we have to do right now. But I think being open and honest and transparent with investors about, those challenges is the only thing we can do, right? Because there's going to be challenges and issues that arise, and you just got to walk your investor through, and then think of yourself as the guide, right? You're the Yoda on their Skywalker journey, right? They're the hero of this of their story, and you are Yoda. And so the hero's experiencing some trouble, right? Darth Vader's on his way. And, oh, it's even May the 4th. Look at me. I'm like on my Star Wars. Yeah, so Darth Vader's there, and Yoda's gonna guide them through. And so that's your role in this. Like, when you think about investor relations, your role is to really guide them through the process and listen. I mean, I've had investors that I mean, there've been uncomfortable conversations. Investors are upset and frustrated, and I'm here to listen. I'm like, yeah. And they start to apologize. I'm so sorry. I'm saying mean things. I'm like, it's okay. I'm here to listen. That's, if you need to get it out. Right. So because they're worried, they're stressed, they're worried about their money. And right now, the message is, yeah, it is in trouble. We do have a path to profitability, and we need to work together to get there. And so that's kind of what we've been doing.
Thanks, Camilla. Any follow-up question, Rashmi?
Yeah, one follow-up. So clearly, a lot of the deals, like you were saying, it's a lot to do with the interest rates, leaving operations aside. How will that change your future deals and who you partner with, or any learnings that you're going to apply to this in your future partnerships?
Oh, lots of learnings here, and so one of the learnings for me, a future question that I will ask lead sponsors will be in terms of like scale, right? How many properties are in your current portfolio, and what does your asset management team look like? I think that was one of the things that I didn't understand to ask in the beginning, because what happened is that they went on a shopping spree, bought a ton of properties, just scaled too quickly, and weren't able to manage the scale of that and really pay attention to the properties on the level that they need attention. And so that was one of the things that I learned to now ask the lead sponsors is kind of, what's your portfolio? I mean, one of my favorite lead sponsors, she's very clear that she will only have 5 at a time, because she's like, because I want to make sure that those 5 are taken care of. And then her scale plan for scaling is sell my 100 unit and then buy a 250 unit, right? And then sell my 250 unit, buy a 500 unit. So she still has the one asset, but it's a bigger asset, but it's not, buy 10 properties. I'm going to have 5 at a time, and that's it. And I really respect that in terms of her, because she's a very hands-on asset manager. Now I would interview other, I would probably ask a lot more questions about asset management now that I know that the crucial role that it takes there.
I kind of like that mindset too, actually, because the thing is, if you're growing unit perspective, like going from 200 to 500, so it's economies of scale versus, you're just buying 100 units, 5 properties, headache of dealing with all these property managers. And plus, if somebody flakes on your asset management team, there goes your 100 unit. So it just like depends all on the strategy, whatever the business plan that you have for you. And if you follow that through, I think it's going to work out great. Any more questions from anybody else? I can bring you to the spotlight.
Hi, can I ask a quick question?
Sure, go ahead.
I don't know if I joined late, but if you already answered. So when you're speaking to potential investors and they ask, what's the worst thing that they can happen here? Or like, what's the worst case scenario? What do you say?
Well, worst case, I'm honest. Worst case scenario is you lose all your money, right? And any investment that you do, right? There's always the risk of losing money. Now, then I talk about the likelihood of that happening, right? So the likelihood of you losing your money is very slim, because we have all of these mitigations in place. And then I'll kind of talk about the real estate in general. I'll talk about the plan, the business plan, and all of that. So you need to be well versed on your investment strategy of choice. But yeah, worst case scenario is lose all your money. Better, but it's not the biggest risk. That is the worst case scenario. It's not the biggest risk. The biggest risk is that the business plan doesn't go according, exactly as they thought, and the returns will be a little bit lower, right? So that's the risk. But worst case scenario, yeah, just be upfront with them. Like, investors don't want you to beat around the bush. They want to know exactly what's going to happen. And I know at first, when I first started saying that, I was worried that would scare them off, and they'd be like, whoa, okay, I'm not investing in this. But you know what? Once they get through the process and they get to the PPM, do you know how many times in the PPM this says it's a really high risk investment, and you should think like 150 times before you sign this thing? I mean, it's a lot, and that scares investors. And so you have to, just be transparent and open with them.
That's true. I think it's a really good idea if you tell them up front. Otherwise, they're going to ask you that question anyways when they're going to go through the docs. And when they say that, when they see all the rest and it says, contact your CPA, oh God, they're just going to have a heart attack, and they're going to chicken out right there. So it's better to prepare them on the process. It's a learning process. Anybody has any other questions?
So commentary and a question. I've probably been watching.
Hey, Ruben.
Hi. I've probably been watching your progress as a scaling capital raiser closer than just about anybody. In fact, when Binky's like, who should I talk to about raising capital? The first name that I told her, I was like, I want to hear from Camilla. So she reached out to you. I mean, I've been kind of watching you since like before you even did your very first syndication. We met at lunch. And I kind of want to ask about this particular topic, which is more of an organizational structure in terms of follow-up when you're getting your investors. How do you organize it so that you know when to reach back out to them, or do you just put them on a drip list and kind of let that handle based off of them questioning? Any tricks and tips that you are currently implementing for that?
Yes. So for follow-up, right? So so number one is to get them on a call with me, right? And to get a call going. Then after we've had the initial call, they go into my system, and of course, email drip campaigns. So I'm touching them all the time. The other thing that I have that my team and I are working on is, well, if they invest with us, then we'll send out like a gift, right? And so I send out a gift, and then also, and with that gift, ask for referrals. And it's almost always a book. We send out a book. Like, don't send out something that's like I don't send them a mug that says Steady Stream Investments because they don't care about me. Again, right? That's all about me. It's not about them. I need something. I want to send something about them that will be helpful and beneficial to them. So I send a book that they can read, not my book that I wrote because it's not published yet, but it's on its way.
Woo!
You know? I guess I'll send them that once it's published, right? But no, I just send them like Think and Grow Rich or some of those classics or whatever.
Mhm.
But then also, with follow up. So what I'll do is I'll go into the system and I'll just kind of put in there that every 6 to 12 months, I want to do some kind of follow up, especially for those who say they want to invest in the next 6 to 12 months, who are say, okay, we're ready. We want to do this. And then I'll just send them out an email and just say, hey, you want to jump on another call? I'd love to chat with you again, see how things are going, and then personalize it. So the other thing I do that's a good tip is that every call that I get on with an investor, I document the call. And so I literally have pulled up, when we're having this one-on-one conversation, I have pulled up my CRM and I'm typing into it 3 kids, ages 8, 6, and 4, right? And then I'll follow up with them. And they're like, how's your kids? Or, my wife's expecting our first baby in December. And then, a couple months later, I'll be like, hey, how's your baby? How's your new baby? Just little things like that go a long way with investors, because my brain doesn't function always the same, right? And I don't remember everything everybody told me. And I don't remember names or faces, but my CRM remembers. And so it's like my second brain.
So that was my question. You're saying that your software is a CRM that keeps you up to date on all the individuals that you meet. And I guess you're saying that as you meet, you try to keep yourself involved with your CRM, putting in that information. Is that right?
Yep, exactly.
Okay.
Exactly what I do.
That's a good idea. Any more questions, Ruben?
No, I got to jump for a podcast. Thank you so much. Can't wait to touch base with you again, Camilla.
know.
Thanks for setting this up, Dinky.
Sure. Thanks, Ruben. Anybody has any more questions for Camilla? If not, we're almost at the top of the hour. Thanks, Camilla. It was a really, really good session. Would you please share your contact information? How can people reach out to you?
Yeah, so please connect with me on LinkedIn. That's probably one of the best places. So Camilla Jeffs, I'm probably the only Camilla Jeffs in the world. I don't know if any others. Look me up on LinkedIn. And then if you want to email me, it's camilla@steadystreaminvestments.com. So would love to chat with any of you. If you need help with some advice on capital raising and some advice on how to get into this business, anything you need, happy to help.
Thanks, Camilla.